Trump's trade revolution, what it means for the future of global commerce. As Donald Trump prepares to return to the political stage with an even more radical approach to tariffs, the global trade landscape stands at a crossroads. 8 years after his initial promise to rewrite US trade relationships, shrink the good trade deficit, and reinvigorate domestic manufacturing. Trump's proposed measures could herald a seismic shift in a global economic dynamics. His plan for a universal 10% tariff on all US imports and a staggering 60% duty on Chinese goods signals an unprecedented escalation in protectionist policies. While US manufacturing struggled to sustain momentum, Mexico and Vietnam emerged as beneficiaries of the trade war. As companies shifted supply chains away from China, these nations filled with a void. Conversely, retaliatory tariffs from Beijing dealt significant blows to key US industries. Soybean farmers, for instance, lost their dominance in China's market to Brazil and Argentina, a shift deemed irreversible by industry experts. Similarly, US aircraft manufacturers like Boeing faced reduced demand as China turned to Airbus. China's economic resilience further complicates Trump's trade war strategy. Its technological dominance, particularly in electronic smartphones and video game consoles, remains largely untouched. Products spared during Trump's first term could face new tariffs, potentially raising costs of US consumers and businesses. However, replicating China's scale and efficiencies in alternative markets poses for formidable challenge. The introduction of sweeping tariffs raises pressing questions about their broader economic impact. Trump's earlier measures contributed to one-time price hike rather than sustained inflation, but a more extensive tariff regime could disrupt this trend. Factors like exchange rate fluctuation, retaliatory measures, and shifts in global supply chains will influence the overall price impact on consumers. As Trump embarks on his second attempt to reshape global trade, the stakes are higher than ever. His aggressive tariff policies could bolster certain domestic industries in the short term, but risk alienating key trading partners, disrupting global supply chains, and straining household budgets. The ultimate success of these measures will depend on their ability to balance economic protectionism with global competitiveness.